Okay. So on this call, we're specifically looking at the acquisition, and we're briefly going to touch on market selection, lead generation, and deal underwriting. On future calls, we will have a full session on market selection. We will have a full session on lead generation, a full session on deal underwriting. You guys see where I'm going with this? This is how we've created the 12 webinar program, is just specifically going through each and every one of these levers, which is the ones that are circled in blue, and how they'll affect the bigger circle of buying right, optimizing financial freedom, operating with excellence, and then so forth, getting to the hands-off generational wealth. Okay, so that's the whole iOS system. That's what we're going to be going for. Okay. Again, as we start in this presentation, we got about 30 minutes left. So we're going to be kind of doing rapid fire as we get through it. And just feel free, if you guys got any questions as we go through, put them in the chat box. I'm just seeing geographical freedom is a great one for the freedom one. So market selection. Again, we're not going to have time to go through all the ins and outs of market selection, but I did select, I think 3 or 4 points in market selection that I want to really drive home. The first one being, I should probably ask you guys that. Like, what do you guys look at the most important indicator for a market? What is everyone, maybe put it in the chat box. What is everyone looking at? I know I just shared a screen called job growth. What kind of key metrics are we looking at? Affordability, employment. What would you guys say your number one metric is when selecting a market? Vacancy rates, what is it? And feel free, you can come off mute. You can put it in the chat box, whatever you're comfortable with. But I definitely need some answers here. Profitability, Grace one. How do you gauge profitability? Like profitability, what would that be? Like appreciation, cash flow? Like expand on that. Price growth, rental rates. These are all really good answers. But I would actually differ, like price relative to rental rates. These are, yes. Kevin said job growth and size of the market. Yes, these are the real answers. Job growth and population growth, okay? Because those are the stats that we need to be focused on. Because seeing price growth and rental growth, they're at the end of the spectrum. So I'm just going to skip through these because I think you guys already said most of these. And I built this chart, and again, I'll send it to you guys after this. It's just like a simple PDF download. But in my experience, yeah, great answers, medium income. In my experience, the number one thing to look at as a real estate investor, the number one thing is job growth and investment in the community. That's number one, because when you have the job growth and the city or country investing in your community, what happens? Where do people go? People are going to move there. They're going to move there for the jobs. When people move there to go to the jobs, what happens to the rental market? Someone's comment in the chat box was rental prices are going to increase, right? If we have more people moving there, the rents will increase. The vacancies will then decrease, forcing the rents to increase, okay? Rents increasing means property values increase, which means, investors are looking at this. They're saying, oh, what markets can I invest in today to get the most appreciation? And that's where investor attraction also happens. And really where it comes down to, this is where we build the generational wealth, and not just generational wealth, secure generational wealth, because it's built on a market with a solid foundation. Okay? So love the answers, love the shares, appreciate it, guys putting some energy in there. But if we're just coming at this and being like, oh, I just want to look at stats to see, what market appreciated the most over the last 5 years, you're going to be missing key things. Like you're going to want to see some recent stats. Okay, what new jobs are moving into that city? What investments are coming into that city? And you're going to be able to predict population growth, predict increased rental demand, increased supply and demand, et cetera, et cetera, et cetera. And then you can be able to get in down here versus waiting till the market's all the way up here, and then there might not actually be an opportunity there. Okay, so this is the PDF that, again, the iOS system is built on. and I'll definitely make sure to share it with each and every one of you. Someone mentioned medium income and affordability. I am super passionate about medium income affordability, and also just looking at, okay, what's the average income in that city, comparing it to the average price. We'll probably dive more into that on the, like I mentioned before, this is just one of the webinars on the whole title acquisition. We will have one specific webinar on market selection. That's actually going to be the next one. I'll share more details with you later, but we're just going to dive into market selection on that one, and we'll go through more stats. But just keep in mind, to really build that hands off or generational wealth, we need to understand what's going on in the market, right? Where is the money flowing to? Where are the jobs? Because that's where the people are moving to. Okay, thumbs up if everyone's on the same page. Awesome. All right. So next accelerator to really get the acquisition. Now that we kind of got a general idea of what markets we should be investing in, we need to focus on the numbers. Okay, the deal underwriting, and again, making this interactive. What are some key things that you guys are looking at specifically when underwriting a deal? So, some people just, as you guys are typing in the chat box, some people are mentioning, I'm trying to buy units for 100K a door, or I'm looking for this amount of cash flow per unit. These are all good answers. What are some of the actual deal underwriting metrics that you guys use on your deals? And so it's okay if you don't have one, if you're more focused on the market, not so much the underwriting. Okay. Cap rate, great measurement. Okay, there we go. Lauren said minimum 8% cash on cash return. I love that. So cash on cash return, we'll just go COC for short. All that is, guys, is looking at the total annual cash flow, 1 year of cash flow from the building, and then dividing it by the initial investment or the capital stuck in the deal, and making sure it's at least 8%. And if you can hit an 8% cash on cash return, and it's been in a really good market, and you're checking the boxes on the other levers, that's going to be a phenomenal investment long term. Any others before we move on? Because Lauren hit the nail on the head. Cash on cash is just skipping through here. Cash on cash is one of our crucial metrics. So making sure we hit a nice cash on cash return. We're not looking to buy, like I personally not looking to buy in negative cash flow markets whatsoever. It has to start off with cash flow. Another thing I put here is, okay, love it. So now we're getting more technical. This is what I was looking for. So Shavit said minimum 15% IRR and positive cash flow. So internal rate of return, IRR. That's my next one here. So with a internal rate of return, and Shavit, maybe just comment on that a little more. Are you factoring in appreciation on that, or is that strictly cash flow and mortgage pay down? I know for us,
that's including property appreciation.
Okay.
Yeah.
Property appreciation, cash flow, and mortgage pay down.
Yep.
Okay, love it. And these are great answers.
I mean, everything: mortgage pay down, capital expenditure. If you are looking at any capital expenditure in the, holding period, everything.
Yeah, and you need to have these as an investor. Like, you need to have your target metrics so that you can analyze 100 deals and see which one makes sense, right? And should be brought up capital expenditures. You need to also be analyzing these deals using the appropriate vacancy rates, property management rates, capital expenditures, maintenance, any admin cost, like. Another cost that we don't even think about is like, your legal costs or your accounting costs of buying, this sixplex or this multifamily. Realtor is not going to do that stuff for you. So you really have to look at it from the conservative, the worst case scenario. And anything on top of that will just be gravy, just be a bonus. Again, we're going to have a specific session on deal underwriting. We'll just underwrite numerous deals, and I can show you some live numbers. But as we go through this, one other key component here that I really want to drive home for your numbers is yes, it's great to have the cash on cash. It's great to have the internal rate of return, but you do need, I think you do also need two other metrics, and one of them is the MAPP, the maximum allowable purchase
Esatto,
price. Then you know how much you can afford to offer on a building. Okay, there's nothing worse than going into a competitive market trying to buy a piece of real estate and you have 10 15 offers on a property and you don't know what your maximum purchase price is. Okay, so uh before we move on, once you've figured out your cash on cash return, your IRR metrics, you can then these really will become your KPI, your key performance indicators for your property, and ultimately create your maximum allowable purchase price. So if this is the first time that you've heard of cash on cash return or internal rate of investment, that's okay. You will learn this stuff. Even if you're a passive investor looking to invest passively, you still should understand this. Okay, it's a must. And again, on that webinar for numbers, we will dive directly in that. But the maximum allowable purchase price, all the work that goes into the cash on cash, projecting the expenses, internal rate of return, that's to create, hey, listen, on this building, this is the most we can offer, to make sure that we get the 8% cash on cash, to make sure that we get that target internal rate of return. Does that make sense, guys? Virtual thumbs up or thumbs up. And if you do have a camera, okay, perfect, Jake. Thanks for jumping in. All right. Okay. Last but not least, we're almost wrapped up here. I'm going to share with you the last piece, the lead generation. We're going to look at a case study, and then I'll share with you guys next steps for the next call that we're going to be doing. So this is probably the one I'm most excited about because everybody is so excited about like getting deals, getting off market deals. Like it just feels like the hottest topic. Okay, so I'm curious as I'm going through this, where are you guys looking for your deals right now? If you're looking to actively buy, is it on MLS, off MLS? Like what's been some of your, and for myself, we've done it all. We've done the flyers, we've done the signs, we've done absolutely everything. So, you have your MLS, which is typically crowded, it's competitive. And then also we have off-market deals, which, typically offer less competition. This is the slide that I'm going to spend some time on here. And I think it comes from, everybody talks about your net worth being your net worth, right? How many times have we heard that at a real estate seminar? And it's like, let's just go out there and and network with other people that we want to, be like. I think it's the same when it comes to deals. So what I mean by that, and I put in here, congregation creates multiplication. So congregation is a group, really like a group of like a like type of people. So if I'm in the business, you can hear now, perfect, Phil. If I'm in the business of, let's say, buying, really high-end apartment buildings, okay, like turnkey, maybe new builds or something along those lines, those people that own those apartments are probably going to be a specific demographic. In order to penetrate that demographic, you're probably going to have to go to like higher end like golf clubs or wine and dine or take them out golfing or do what those types of people want to do. Do you know what I mean? Versus the exact opposite where you're buying, just share some internal information here. Like we buy a lot of rundown single family homes from hoarders, drug addicts, you name it. We probably bought those houses before and fixed them and flipped. So I'm kind of giving you two extremes right now, right? So it depends on what your goal is. Again, when it comes back to like knowing your numbers and what types of properties are you trying to buy, but you have to think of like, who is the ideal owner of that property and how can you infiltrate that congregation? And, for some of us, yes, it might be going to golf clubs, but for others, it might be pounding the streets and going to sit in someone's living room who you definitely wouldn't want to be friends with and understanding like their demographic and he'll know, Sally down the street that might have a house for sale. So it's it's taking the net worth to the net worth to a different level, because whether your seller is, you know, super motivated on a lower social class or a much higher social class, you're going to have to figure out how to penetrate into that and grow your deal source. Does that make sense? That's probably like the best piece of advice I could give anyone out there that's looking to find off market deals. Whether that is, you know, speaking with a real estate agent that sells multifamily, speaking with property managers, it's honestly all in the networking. This will be the most consistent way how you can get your deals. Okay. Yes, you can look on MLS. Yes, you can just do a round of flyers. But if you want to actually create a long lasting pipeline of deals where they just come to you, it's through this networking model. It's through wine and dining realtors sharing, you know, your personal experiences, your personal goals, that because those relationships will last a lot longer. Does that make sense to everybody? So there, I don't think there's a real like quick fix like, hey, you know, buy these flyers and send it out. It's again, it's a long-term game. It's taken us, you know, 7, 8 years in Sudbury to be having the amount of deal referrals that we get, and it's all been through this congregation creates multiplication effect. Okay. Again, we're gonna do a full call specifically on lead gen, and I'll go into this in more detail when we get there. But just wanted to share some high level things about how you can apply this today without having to wait a few weeks. Okay. And the third accelerator, oh, just one more point here. And I see this far too often. It's a consistency game, right? Like if you're got to be in this for the long term, and if your goal is to find that higher end apartment seller, it's going to take you a long time. Like it's going to take you months, if not years, to penetrate that network. And that's why everybody gives up. That's why people will start it and they'll be like, hey, I'm going to buy apartments. And then, you know, next month they're looking at Airbnbs. And then, you know, a few months go along and they're switching the strategies. They're all over the place. You have to create consistency, just keep doing the same thing, and then do a lot of it, increase your volume. Okay. But I'm going to move on from here. We'll also be talking about like the price versus terms on our deep dive into like lead generation negotiation. And what do you guys think is more important for you as an investor? Do you think it's purchase price, or do you think it's the terms that you can get on the deal? If you could have anything you wanted. Um, for us, it might surprise a lot of people, but the purchase price is actually second. We're all about the terms. So when we go into this one in a deep dive, we'll show you how you can structure deals. Yes, you can pay what the seller's asking, but you can get terms. Yeah, perfect. Okay. So here's a quick case study that literally demonstrates multiplication through acquisition. So as we go through these webinars, we're going to look at multiple different properties, case studies. This specific one is going to be on 252 Baker. I've talked about this property before, and you know, this was a property that we picked up on MLS. We did significant renovations to it. You know, we projected, hey, this is what we wanted our cash on cash to be. You know, this is what we wanted our internal rate of return to be. It did much better. However, I'm gonna go through this in a sec. So again, we were using slightly different numbers than the ones that were mentioned today. Typically, we're looking at properties with you know, that's a terrible color. 6 to 10% cash on cash return is typically our target. This one had actually 12% projected, and usually we're at a 20% IRR, and that's not including appreciation. Okay, so that was our projection on this one. Both were exceeded. However, what I'm trying to get across here is this is what happened like on this deal. So this is one deal, and we'll look at. I know there's a couple new people just jumped on, so we'll look at how this was multiplication through acquisition. Okay, so first of all, there were 17 offers on this property. We were able to get it under contract, and right away we got a VTB, so a vendor take back. We'll be talking about that on future calls. So $100,000 VTB. The seller loaned us $100K to buy his property. Okay, this was a 6 unit. After this was completed, Okay, the seller, you know, we refinance, we paid the seller back his $100,000. The seller now wants to reinvest in more deals. Okay, so already the seller wants to reinvest. The realtor that sold us the deal, we gained confidence with the realtor. The realtor also gave us another property. Okay, that came down the line in the future. And the investors who actually invested in the sixplex got their capital back, and now they're reinvesting. Okay, so this is where it kind of spider webs out, because from one deal we now have a seller reinvesting, we have our investors reinvesting, we have the realtor giving us more deals. Just this is just one, you know, kind of example. So it really it starts with just understanding the market, understanding how to underwrite, understanding how to lead generation, how to negotiate, and then it will expand into this, you know, crazy business that you're now, you know, it's got almost legs of its own because you got more realtors. You can understand. Does everyone understand what I'm trying to show you guys here? Like from one deal, you now have a seller reinvesting his money, a realtor feeding you more deals, investors wanting to invest. Then you buy another building, the same thing happens, and all of a sudden, you know, 7, 8 years later, you have this huge pipeline of investors, realtors, people that want to loan you capital. Okay, so it starts with one, and after doing it successful, it really will snowball. Okay, so this is what we covered today. We talked about, and I wanted to kind of start this off in a specific way. So we talked a little bit about acquisition. Okay, we talked about we talked about acquisition and how you must buy right. We briefly looked at market selection. We looked at lead generation and underwriting. The next call we do together will be specifically on market selection, the entire call. Okay, so I'm going to use one of the markets that I invest in as an example, and we'll go through, like, I know you guys shared some really good thoughts like population growth, what the rental prices are, affordability. We'll dissect that market. I will also give you guys a scorecard that you can use to analyze any market in your city. So whether we're going to work together or you guys want to take this and apply it in your own market, that's what the iOS system is meant for. Okay. Now, before we wrap up, so one more thing on here, guys. So after we complete acquisition, what we'll do is we'll switch over to the next one about operating with excellency. That's when we'll bring in like lawyers to talk about legacy planning. We'll be looking at asset management, investor transparency. Then lastly, we'll switch over to optimizing financial freedom, looking at different exercises you guys can do personally and in your business to achieve ultimately hands-off generational wealth. That's the full iOS system, which we're going to be going through. Okay. I'll share with you guys this PDF. That's what you guys are getting from being here live today. So you guys can just see the flow of that through the iOS system. The next call we have, we're going to be wrapped up in a couple minutes here. The next call we have is Thursday, September 25th at 5:30. So I'm going to be doing these most likely every 2 weeks on a Thursday at 5:30. Okay. Because you guys showed up, I've automatically registered you for this call on not next Thursday, but the following after, the 25th. And if you can't attend or you don't want to attend, just let me know. Just respond to the email and say, hey, Zach, you're great, but I'm not interested. If you do want to keep attending, because we're going to do 12 of these, you're going to be automatically registered unless you let me know that you're not interested. Okay. Typically, we send I try not to be the guy who's just like harassing people with reminders. Typically, I send like a 24-hour reminder and then like as we're starting reminder. But I'll most likely have like 2, maybe 3 reminders before the event. If that's too much for you, just let me know. If you don't want reminders, again, just let me know. But just understand, being on this call today, you're automatically registered for this event in any for the full iOS, which we're gonna have 12 calls, okay, every 2 weeks. Now, if you're interested in kind of like more information on active deals that we're doing, you can shoot me a DM, an email, or even like leave a comment right now about and just say multifamily, because I'm doing other events that we're raising capital for. We're actively putting together deals. If you're interested in learning more about that, just send me a message and I'll send you some times where we're going to be doing that and raising capital for deals that we're closing on. Okay. So for instance, we had a like through the power, as I shared before, of multiplication and understanding the market, running the numbers, building that pipeline of deals. We had two realtors approached us a few weeks ago with a 7-unit apartment building, turnkey, for under $700,000 in Sudbury, and it like honestly, there's built in like 200K of equity. We're having a refinance after 1 year at 1.1 million. So the reason we're getting those deals is from laying the foundation from 7 to 8 years. And if you want me to show you deals like that, just send me a message. But this specific call that we're all on today and that you're automatically signed up for, it's specifically to go through the iOS system, which is going to be the investor operating system, which we're going to have 12 calls on, going through each and every one of those stages that I shared with you guys. Okay, so I'll open it up now if anyone had any questions or comments, and then we'll wrap up in the next few minutes. But if you got to hop off, no worries. I appreciate you guys jumping on, and I will probably get some different markers, change some light so that on the next call we can use the whiteboard more effectively, because I think that's kind of fun. So, but any comments, questions before we run here, guys? Okay.
I have a quick question, Zach.
Yeah, go ahead, Sweet.
Yeah, so I mean, I was in touch with you, I think, for a long time. So why specifically you have selected only Sudbury market?
Oh, brother, you better be coming on this one.
Oh, that's
Um,
the
yeah,
next
that's gonna
next
be the
one.
one on the 25th. Like, I
Okay.
think after this call, everyone will want to invest in Sudbury. But there is the aspect of market fundamentals. So remember I was showing you that graph and like looking at, okay, where's the city investing their money? What type of jobs? The amount of money that's flooding into Sudbury right now it's incredible. Like there's like a $400 million development going on downtown. Panoramic Properties just got approved to build like 300 condo units off the lake. There's a $12 million development again from a Panoramic going on downtown. It's one of the highest cities in Canada in terms of household income. So the household income relative to purchase price is still very much affordable. So there's just a lot of benefits. Like the vacancy rate is super low, which we'll dive in each and every one. The other side of the coin, though, that we'll get into, because there's definitely other markets in Canada that are phenomenal to invest in. But the other side of the coin is you also need the team, right? You need the property managers, you need the construction team, you need the leads, right? Like you need the off
Yeah.
market deals, and that's where we built our pipeline. Like that's where we established ourselves as a company. So that's also holding us to that area. Makes sense. Like if we could pick up that 7-8 years of networks and pipeline and drop it into a different market, like it would work. But Sudbury's like just the go-to because of our experience there and also the market fundamentals.
Okay. Okay. And in multifamily, generally, I mean, in this market in Ontario specifically, the laws are not in favor of homeowners. So
Yeah.
how do you bake tenant going bad into your underwriting?
Yeah. Again, on the deal underwriting call, like I'll show you how we have like a percentage for bad debt.
Okay.
Um, I mean, ultimately, it's definitely a risk no matter where you're investing. Ontario being probably like one of the worst provinces for landlord tenant board. But I'll say this though, like where I built the most amount of wealth in real estate is through owning properties for a long period of time. So cash flow is definitely important. You want to be hitting those cash flow metrics, but that's why we also buy multifamily, because if you have 12 units or 20 units and you have one tenant that's causing issues, you're typically not seeing, a massive hit versus like owning a single family home and all of a sudden you got a bad tenant, then your investment's like just wrecked. So, Shavit, to answer your question, like we've definitely had bad tenant experience before in Ontario, but we're just on top of our paperwork, working with great paralegals. So, if, a lot of people get afraid. Okay, well, what happens if a tenant doesn't pay rent and they're a bad tenant? Honestly, that doesn't really concern me. My like because we have such a good process for finding tenants. So when we've placed tenants, we've had a really good track record. And most likely, if I've inherited a tenant, they're paying very low rent. So if they just don't pay rent, we're gonna make more money because we're just gonna get them out in 4 months and renovate the unit, increase the rents. So it hasn't really been a concern, but I know like it is a big sticking point. We're gonna have probably one of our levers of the 12 is actually on property management. We can talk about leasing and how to avoid that, but yeah, hopefully that helps.
Okay. Okay. I mean, that has been the biggest fear that I've been thinking because as you rightly said, that if you have 20, 50 unit, then it makes sense that it may not matter much. But in case you are buying 4 or 6 unit property and one tenant goes bad, the tenant landlord board takes 8 months to 10 months to resolve it.
Yeah.
So
Well,
you'll be, yeah,
we're hovering around the time frame of like 4 months, honestly, like 4 or 5 months for N4. So it's been the easiest to get people out with non-payment of rent. It's more difficult if they're like, you know, doing other stuff in the unit and you're trying to evict them. That's definitely more of a advance. But non-payment of rent is pretty straightforward and should be most of the like our strategy has really been like buying vacant buildings, or like mostly vacant buildings, so we're able to place our own tenants, and that could drastically reduce your chances because you can vet them, right? Like more
yeah,
so than just buying like a sixplex that has six tenants. Yeah, I mean, there's always risks. Like we're just doing our best to mitigate them. But as I mentioned, you know, if you do have a problematic tenant, this is why we're in this for the this is why we're in this for the long term game, right? Because we're just
yeah,
turn them over, re-rent it, own the property for 5 years. That's when you're really going to do your refinances and pull out, lots of capital.
yeah, makes sense. Thanks, Jack.
No problem. No worries, Phil. Hopefully, you guys got some value. Anything else before we wrap up? No worries, Richard. Thanks for joining. So as I mentioned, I'm gonna make sure every one of you is just automatically signed up for the next call on the 25th. They'll just make it easier. If you don't want to attend, just shoot me a message, reply. Yes, there is a recording, but I think I only started it like 15 minutes in, so we'll do better at that next time too. So I'll make sure to send out the recording. I'll probably post this summer as well, so you guys have it. And I'll see you guys on the 25th. And in the meantime, if you do want to see some live deals and me underwriting it, just let me know. We're going to be doing a call, I think, next week on some live deals. But appreciate everyone for jumping on. Thanks, guys. Thanks, BJ, Karen, Bruce. All right.